Good day, everyone. Ali Safi here from Safi Financial Network. In today's video, we're going to talk about a very important chart that can signaling us um, bottom or top of the stock market, and that's going to be a put-call ratio. So here's the put-call ratio, which means the ratio of a put option compared to call options. So this is kind of like a contrary indicator. This is not a direct indicator. So this means whenever people are just putting lots of put options into market, this means that they're very bearish. And usually that happens at the market bottom. Yes. So at the market bottom, people are panicking and they're just increasing lots of puts to just hedge their portfolio against the downdraft. And that's kind of like the scenario that I'm looking at for a fantastic buying opportunity. And this blue line here is put call ratio. And you see that? So whenever the put call ratio is getting to the bear side, so this means people are just putting lots of put options and the ratio is getting lower and lower. So that's the ratio is getting lower and lower. This means people are just having no put options. So usually that happens during the market top. So in market top, people are kind of like a bullish and they're gonna putting lots of call options instead of put options because they are kind of like optimistic about the market momentum to the upside. So in this chart, you see that this blue line, whenever we are getting here, this means people are getting lots of put options. And when we are at the bottom, we are getting lots of call options. Right now, we are at no man's land, but I just want to show you something pretty interesting. So this is May 2024, and this tells me that this is the market bottom. Why? Because the number of put options are getting extremely high, and people just hedging their portfolio because they're panicking or kind of like a washout low and trigger lots of put options instead of call options. So the sentiment tells me that people are panicking, market is in a great corrective move for a next rally to the upside. And sure enough, it has the same scenario. Here is in August, when we are getting at the top of the August. So that was kind of like a triggered a very nice sell-off to the downside. And this is kind of like the market top that we saw in August timeframe. So the number of call options are extremely high compared to put options, and people were pretty optimistic. That's how the market top happens. Right now, we are in kind of like a no man's land. If it gets here, I would say probably we are pretty close to a market top. But if it goes higher, I would say I'm gonna just pay attention more to this because we are in an uptrend. And whenever we are in an uptrend, when people are panicking, this is going to be a significant low. Right there, right there, you see that. So this is kind of like the significant low for the market. And it's kind of like getting ready for another rally to the upside. And I'm just looking for, if I want to say that, based on the chart S&P 500, I'm kind of like looking for a kind of like a corrective move. If that correction happens in the next few months, and we are getting to kind of like this significant bottom, usually that put option, that put call ratio, this ratio, I mean, like getting to a very significant high. This means people are just betting on the put option rather than call option. And that tells me that market is forming the bottom. Right now, we are kind of like mimicking at the overbought condition or kind of like a market top condition. But again, this week, we didn't get to this level. So whenever we get to this level, I'm kind of like a concern. And I'm just telling you guys the market top is pretty close. And we should just worry about a severe correction down the road. All right, folks, that's very short and sweet video. If you like this video, please smash the like button, subscribe to our channel, and have a good one. See you on the chart. Bye-bye.